homeless destitute. Homeless isn't just about not having a roof. It's being locked out of the entire financial system. No bank account, no ID, no mailing address. You can't rent an apartment without proof of income you don't have, and you can't get proof of income without an address to give an employer. That's the trap. The system is built assuming you have the basic paperwork of a normal adult. Without it, nothing else works. The way out is boring and slow. Step 1. Get a government-issued ID. Most states issue them free or nearly free to people without housing. Step 2. Get into a shelter. Shelters give you a usable address for job applications. Step 3. Open a free bank account. Chime, Cash App, or a local credit union will do it with minimal paperwork. Step 4. Apply for SNAP and any state assistance you qualify for. Step 5. Find any cash income. Day labor, warehouse shifts, gig apps. The goal at this level isn't saving. It's just getting back inside the system. Crisis level. Crisis level is where income exists, but the math doesn't. You have a job, you have bills. The bills are bigger. Every month ends in overdraft fees, late charges, and a new decision about which bill gets skipped this cycle. One unexpected $400 expense, and you're done. This is the most stressful rung on the wealth ladder. Not because it's the poorest, but because you can see the next step and keep getting knocked back. The way out starts with triage. Call every creditor and negotiate a payment plan. Credit cards, medical bills, utilities, they all have hardship programs most people don't know exist. Call 211 in the U.S. for local rental assistance, food pantries, and emergency funds specific to your city. Take any extra work, DoorDash, Amazon Flex, weekend shifts. Sell anything non-essential. The old iPad, the second TV, that designer bag. The goal isn't wealth. It's a $500 buffer. That single number is the difference between a flat tire being a bad day and a flat tire being eviction 2 months later. Paycheck to paycheck. This is the biggest group in America. Roughly 60% of adults live here. Bills get covered most months. The account hits zero right before payday. You're not behind, but you're not saving. One emergency and you're back at crisis level. The problem at this level isn't income. It's structure. Money comes in and leaves through the same front door. There's no firewall between spending and saving. The fix is automation. Open a separate savings account at a different bank so it's annoying to transfer from. Set an automatic transfer of $50 every Friday the moment payday hits. $50 a week is $2,600 a year, and you won't even feel it leave. Next, cut one recurring expense worth at least $100 a month. Gym you don't use, streaming services you forgot about, the DoorDash habit. Apply that saving to the same account. Build a $1,000 emergency fund before touching any debt. Not $2,000, not $500. $1,000, that's the buffer that stops your life from collapsing the next time the car breaks. Treading water. Treading water looks like progress. You have a small buffer, a little in savings. You're not stressed about rent, but under the surface something is growing. A credit card balance, a car loan, a buy now, pay later tab you stopped checking. At this level, your income only covers your lifestyle because debt is quietly subsidizing it. Every month, interest is chewing through your future paycheck before you earn it. The fix is surgical. Write down every debt with the interest rate next to it. Forget the emotional stuff about which one makes you feel worst. Attack the highest interest rate first. It's called the avalanche method, and it saves the most money, full stop. Free up $200 to $500 a month by cutting fixed expenses. Cheaper phone plan. Refinance the car. Cook at home 6 nights a week. Apply every extra dollar to the top debt. And stop using credit for anything new. The math only works if the hole stops getting deeper. Treading water becomes drowning the second you add another monthly payment to the pile. Financially stable. Financially stable means bills get paid, a small emergency fund exists, and you're not running numbers at 2 a.m. anymore. You're not rich. You're just not stressed. For most people, that alone feels like winning. Here's the problem. Stable is not the same as building. Your money is paused, every paycheck comes in and mostly leaves. You're not going backward, but you're not compounding either. The fix is to stop letting money sit in a checking account earning nothing. Start with your employer $400 and $1,000 match. Not getting the match is giving up free money. and roughly 1 in 4 employees still do it. Open a Roth IRA or a brokerage account. Set automatic contributions into a low-fee index fund like VTI or VOO. Target $2,000 a month invested, even if you have to ramp up slowly. Track your net worth every month. Assets minus debts. Even a simple spreadsheet works. You can't grow what you don't measure, and most people never even look at the number. Middle class is where most of America aspires to land. Steady income, a reliable job, some retirement savings. Home ownership is actually possible. Vacations happen. Kids can do activities. From the outside, it looks like the finish line. Financially, it's the starting line. The biggest move at this level is buying a home. Not because real estate always goes up, because it doesn't, but because rent is pure expense and a mortgage is forced savings. 30 years of paying rent leaves you with zero. 30 years of paying a mortgage leaves you with a paid-off asset worth hundreds of thousands. Second, push your income up. Middle-class people who stay middle class take the annual 3% raise and call it a day. Promotions happen to people who ask. Side hustles happen to people who build them. Job hopping typically earns 10 to 20% more than staying put. Third, invest 15 to 20% of your income, not when you feel like it. Every month. This is the rung where compounding either starts working for you or it doesn't. Upper middle class is 200,000 to 500,000 net worth. Good job, good house. A funded retirement account, the nice car. On paper, you're doing well. There's still a problem. You're trading time for money. If you stopped working today, your lifestyle collapses inside 6 months. That's not wealth. That's a well-paying leash. The move at this level is to stop earning only through your job. Max out every tax-advantaged account first. 401k Roth IRA, HSA if you have one. Stacked together, that's about $30,000 a year in tax-advantaged contribution space, which compounds aggressively over time. Then start building income that doesn't need you in a chair for 8 hours. A rental property, a small business, a content platform, something that earns while you sleep. Most people stall here forever because upper middle is comfortable, the job pays well, the house is nice. Building anything extra feels unnecessary. That comfort is exactly why most people never reach the next level. The comfort is the trap. Mass affluent. Mass affluent is 500,000 to 1 million net worth. Real savings. Some passive income, maybe a rental, maybe equity in a business. You're probably not rich by your city standards, but you're comfortably past most of the country. Here's the pivot. This is the level where people either break through to real wealth or stall for 20 years. The difference is whether you keep scaling an income stream or you coast on what you already built. The move is to take one income stream and scale it into something that generates $5,000 to $10,000 a month passively. Expand the rental into a small portfolio. Grow the online business past the side hustle phase. Shift the brokerage toward a 50-50 mix of growth and income-producing assets. And reinvest everything. Mass affluent stalls when people start upgrading. Bigger house, better car, fancier vacations. That's lifestyle inflation, and it's the number one reason 700,000 net worths stay 700,000 net worths forever. The target is simple. $1 million liquid and invested. Millionaire. $1 million isn't what it used to be. It's not rich. It's comfortable. Roughly 22 million Americans hit this level. You have real money working for you. Probably $30,000 to $40,000 a year in passive investment returns without touching the principal. Here's what changes. Money starts doing the work. Let it sit untouched and you hit 2 million in 10 years without earning another dollar. But compounding only works if you let it. The move is to diversify across 3 asset classes: real estate, equities, business equity. Most millionaires get stuck in one of these and miss the multiplier effect of spreading across all 3. Add zero lifestyle inflation. This is the hardest part. You just crossed $1 million. Your brain wants a nicer car, a bigger house, a better vacation. Every one of those purchases resets the compounding clock. Target multiple income streams pulling in $20,000 a month combined. Dividends, rental income, business profits. Once that stack covers your lifestyle, you stop working. Because you have to. Multimillionaire, 5 to 30 million net worth. This is where most people would call you actually rich. Passive income covers your entire lifestyle. You don't have to work. You might still work. But the check isn't why the game changes here. You're not just saving anymore. You're allocating capital. Every decision is about compounding at scale. The move is to own or build businesses that run without you. Hire operators, buy existing companies with proven cash flow. Most multimillionaires still personally running the business they own have misunderstood what level they're at. You also get access to deals the public never sees: private equity, venture capital, pre-IPO rounds, angel investing. Minimums are usually $250,000 to $1 million per deal, which is exactly why 1 million net worths never get the invite. At this level, the biggest risk isn't losing money, it's losing momentum. A lot of multimillionaires stop pushing because they don't need more. That's a valid choice. But if your goal is the next level, passive income alone won't get you there. You need equity in something that can scale 10x. Ultra high net worth. Ultra high net worth starts at 30 million. It tops out around 100. There are roughly 300,000 people worldwide at this level. This is where money stops behaving like money and starts behaving like a tool. You don't have assets anymore. You have an institution. The move is to set up a family office, a dedicated team that handles investments, taxes, estate planning, and deal flow. The minimum economical size for an outsourced family office is around 30 million, which is exactly why this level starts there. You get access to investment categories the rest of the market never sees: private placements, hedge funds with 5 million minimums, direct stakes in private companies, real estate deals structured through syndicates. Your biggest lever at this level isn't returns, it's network. The deals that actually compound wealth at this scale aren't listed anywhere. They come from another UHNW person inviting you into the round. This is why rich people stay rich. It's not magic, it's access, and access only gets handed to people already in the room. Centimillionaire, 100 to just under $1 billion, roughly 30,000 people globally. You're in the top 0.001%, and you're still not a billionaire. The gap between 100 million and $1 billion is the hardest jump on the entire ladder. It's 10 times harder than going from 1 million to 100 million. The reason is math. Compounding normal investments won't get you there in a human lifetime. Park 100 million in the market returning 10% a year, and you hit $1 billion in 24 years. Most people don't have 24 years left when they reach this level. The only real path from here to billionaire is owning equity in something that 100 times. A tech company that goes public, a venture fund that hits a unicorn, a private business that sells for 10 figures. At this level, you stop diversifying and start placing concentrated bets. Anchor a venture fund. Take founder positions in high-growth startups. Acquire and roll up mid-market companies. Diversification here locks you into being permanently wealthy. Concentration is the only path to permanently legendary, billionaire. $1 billion, roughly 2,800 people on Earth. You could spend $100,000 a day for 27 years and still not run out. There is no step-by-step path to this level. Every rung before this one had a playbook. This one doesn't. Billionaires come from 3 places. First, you built a company that dominated a market. Bezos, Musk, Zuckerberg. You put everything into one bet that scaled to own an entire category. Second, you owned equity in something that exploded. Early employees at Google, early investors in Facebook, the right stock, the right time, in enough size to matter. Third, you inherited it. Roughly a third of the Forbes list didn't build anything. They were born into a family that already crossed the line. That's it. Nobody budgeted their way here. Nobody saved their way here. Nobody climbed rung by rung. This level doesn't get climbed. It gets built, or it gets handed to you. That's why the advice stops here. At this point, the game itself changed.